Diversity and Venture. Welcome, Sydney. How are you today?
I'm so good. Thank you so much for having me. It was really fun to, you know, get dressed up for the podcast. I was telling my partner this morning, I was like, I have to look cute. I'm gonna be on a podcast.
Aw. Well, I know like it always like I don't like reading bios because I know that it can be like a little, but I also think that like, you worked a lot for that bio, right? Like not just you, but I feel like all of us, like we work a lot for that bio. And so it's like um what why don't you tell us a little bit about what went into creating that incredible bio? You kind of have this fascinating path, starting in public policy and like working your way into venture capital and ultimately deciding to go off on your own. So how did those experiences shape where you are today?
Yeah. Oh my gosh. Thank you. And I feel like that's a recognition mostly that women can give each other because we know it, we see it, we live it. And so it means a lot coming from you. And, I started my career in the public sector working for the Bloomberg administration and got access to so much because he is just, he's freaking Michael Bloomberg. And so I was able to see on this really large scale how change happens. I learned that it really required partnership between both the private sector and the public sector. And prior to that, I was super tunnel visioned on public sector. I was literally like, I interned for Congresswoman Barbara Lee, and I was like, I'm just gonna have her job one day. That's my life goal. That's my path. And when I started thinking about the private sector, I realized how little I knew. Decided to go to business school to learn. Spent those 2 years mostly off campus in different startups to understand what was going on in the startup ecosystem. I went to Berkeley, so I was in San Francisco slash Berkeley Bay Area, and I got access to the board of one of the startups that I worked for, and I started reading all of their bios. I was like, oh, wow. I was like, Kanye from, he used to be, when he was at Collaborative Fund, was on the board of this company. Someone from, um, oh my gosh, what's her name? From the all-women VC firm that just like hit over $1 billion. It was heavy hitters on this board. And I was like, I want their jobs. How do I get their jobs? And so I went back to, campus and asked my call MBA career counselors, yes, go Bears.
Yeah,
And
like somebody's shouting out at you.
and they're like, girl, good luck. You're coming from nonprofit public sector and you think you can be in venture capital? Like, so does everyone. So we don't really have too many, um, we don't have many good things to say about your chances here, but we wish you well. And so I was like, you know what? That's okay. I got this. I've heard this before. I went to LinkedIn Premium, signed up, cold emailed hundreds of people. One of the folks who responded back to me was my ticket into venture capital. She was an LP at Precursor Ventures at the time. And so she's like, this guy needs some help. And I don't know if you're interested in that. I didn't really understand what I was getting myself into, but I knew I wanted this shot, that this was a once in a lifetime shot. And so I jumped into the deep end and really, just spent all of my time thinking, breathing, living that world for almost 7 years. And towards the end of it, my family could start seeing the weight that I was really starting to carry about all of this work. Um, and the weight was driven by, and you had this question actually in our conversation kind of briefing, was like, when was the aha moment that it was time to launch my own company?
Yeah.
And I felt myself quieting myself, you know what that feels like?
Right.
I'm sure you do.
I do, but I'm shocked to hear you say that. You don't strike me as someone who's easily quieted.
And it was because everyone was telling me, you're so lucky. Don't you know how lucky you
Oh,
are? This is the
ew.
best, right?
That's
This is
yeah,
the
that's gross.
this is the
Thanks.
best job. Why would you ever think of messing this up? And I was like, okay, you're right. I'm crazy. I am. And so I'll just sit here and be quiet. And it was there was this really great study that said that women have a higher likelihood of getting like autoimmune disorders or chronic diseases. And they were linking that to this self-silencing that women do often. And I saw that happening in myself. And I was like, this isn't, I can't. I have to start talking. I need to start doing. I need to start moving. And that's when I knew it was time to launch Symphonic.
So you were building track record at Precursor. Like how much of that did you carry into Symphonic or were you feeling like, actually, I want to do this differently?
There was, it was both. So there was something about the ability to build a track record at a journalist fund that is complete freedom. Because then you're able to say, okay, I just get to see all of these things and how this type of company operates and how this type of founder operates. And I like this, I don't like this. I can, you know, learn, I need to learn a little bit more about that. And when I looked back at my track record that I built while at Precursor, I realized that I actually had done investments into companies that are closing access gaps in health and wealth.
Mhm.
And so I'd actually already done the thesis without even really, I think, being that intentional about it. And that was really cool to see that, I actually baked in the thesis of Symphonic without even trying. And so it was very authentic.
So I've in prior conversations, and kind of just sleuthing you, you talk about the power of proximity, about being close to the problem and how that makes you better at solving it. So how did that click for you? Like when did that click for you, um,
Mm.
in forming Symphonic?
Oh my gosh. Okay, so for me, and part of the reason why I talk about Symphonic as really like a culmination of all of my life's experiences is because I'm realizing once I launched it that there were so many different pieces of what I had done, conferences I'd gone to, people I'd listened to that informed my thoughts on the world. And one of them was actually a conference that I went to and heard Brian Stevenson speak. And so he is in a completely different industry. He's a civil rights attorney, mostly focused on helping get folks who are on death row but are wrongly convicted their freedom. And he told this story that was just, it had the whole audience, like we were all breathless. We were all just like holding our breath as he was speaking, where he describes this time of serving one of his clients and going to prison and being able to hug him, and how that just broke down so many of the barriers that that client was really holding on to and that he was holding on to that I think prevented him from serving him very well. And I was like, this is it. And he calls it, I think, the power of, he uses proximity. I don't know if he calls it the power of proximity, but he uses the same terms. I was like, that's it. You don't know what you need to do until you know who you're doing it for. You need to have that understanding. You need to have that um, connection. And if you don't, then I don't actually trust that you know what the right problem to solve is for that community.
And does that mean that you are specifically looking for founders who are like uniquely proximate or uniquely connected to the problem that they're solving? So like, is that something you deliberately want to see? Because I think that we also see a lot of like outsiders coming in to see problems from a different angle.
Hmm. We're really open with what that definition looks like, but it means that you can't have what I like to term business school problem. Like you can't be creating a business school company, which is and I did this when I was at business school. I had a great idea. I knew nothing about that problem, but it seemed like a great idea because I read one book or I talked to, one person or I did, 20 interviews. And then I start digging into it and I realize, oh, wait, I don't know anything about this problem. I actually don't know this community. I actually don't know what I'm doing. And so when I say proximate, I mean you have to have this deep understanding of the community that you're serving. That doesn't mean that you need to be from that community. Maybe it's that your aunt is from this community. Maybe it's that you spent, 5 years in this community. Maybe it's that you just got obsessed about it 10 years ago and have only been committing your research to this community. But I want you to have some expertise around who you're solving the problem for.
I have to say, like, I love the term like a business school problem. And I say this as someone who went to business school and I'm really grateful for my experience there, et cetera, et cetera. And have had at least one company that fits that definition. Like I am so going to borrow that going forward because it's so true. Like I feel like if you want to be an entrepreneur, I feel like in the early stages, all of us are like, I just need the perfect idea. And you're like grasping at like whatever shows up. But sometimes the best, sometimes it's not really about the idea. Sometimes it's about the problem that's underneath it.
Definitely.
I'm so borrowing that. So let's
Please
talk
do.
about, no, yes. Um, and so like in our team, I will spill some tea, but I won't name names. Like in our team, like there's a specific accelerator. They're not as active anymore. But every time that we saw somebody that came out of that like accelerator, it was like, why are they working on this? Like I feel like they just had like a sort of dartboard of ideas and people would just like pick the most random ones. They're like, oh, this is like an X accelerator company like that, and
Yeah.
I who I'm talking about. All right, so let's talk about your thesis. So you back companies that close access gaps in health and wealth, often in areas that touch the public sector. At the best of times, that is hard. Um, what do you look for? I mean, what do you look for in a founder that tells you that they can handle the hard and the complexity, but also just like the incredible uncertainty that comes with these like particular spaces?
hmm It's such a good question. Um, and it is, just to kind of double click on, we're not in the best of times.
Uh,
And so it is a very different time, which is making that um, the need even greater. And I think calls for even more innovation in this space to ensure that we actually are taking care of each other. I think that's my big focus for this year is just like taking care of my people during this moment in time. And when you have that obsession with, actually making sure that this group of folks are okay, I think it's impossible not to want to do the work, to not be really incredibly resourceful to ensure the work happens. And I think when I was early investing, what I did was sometimes conflate somebody's interest in solving the problem and somebody's ability to solve that problem. I think that what I'm so grateful that I did really early on in Symphonic, and I can tell the backstory behind why, is bring on Shruti Shah as she started as venture partner, and now she's my partner at Symphonic and is just brilliant. And she's brilliant on all things ops, on digging into the weeds, on figuring out how to make something tick, is what, the why behind the why behind the why. And so she is our internal, Swiss Army knife to ensure that when a company's founder says that, yes, they're excited about this thing for all the right reasons, they're also the right person to build the company. And so I think you need those two things together in order to be um, appropriately resourced to survive this current moment in time and really, hopefully make the most of what you can do in this moment.
What excites you about these companies and this moment?
Hmm. I think that it's a real folks are um we're kind of the underdogs again. I think that's what I'm realizing about this moment is that last year it felt like we were on top of the world. Our girl was about to go to office, like we had it all. And this year it's like, oh wait. And that has, I think, forced a lot of us to be like, well, then, so where are my people? And so I'm seeing a lot more of these convenings happen and a lot more information sharing in those convenings and a lot more intentionality about like, how are we actually really making sure that we're all going to be successful when we know that we are now the minority? And I think that actually only happens when um, you're David and you're not Goliath. And so it's been really fun to be in those meetings, in those convenings, and really sharing um, and supporting each other to make sure that, we actually are able to do this thing that is a really huge vision. I mean, for us, our vision is to not just close access gaps in health and wealth, but really like make a sizable impact on the racial wealth gap to really decrease health disparities in America. These are huge, huge tasks that we can't do alone. And so it's about how do we make sure that we're working with and finding the other folks who believe in this mission and want to work towards this mission and we get it done.
I'm going to throw a question at you that we didn't talk about before, but what are some, what can you like give us a couple of examples of your investments and how you kind of sourced, what got you so excited about them, and how do you think that they're changing the world? I think it'd
Mhm.
be really, really inspiring to get a couple of stories like that from you.
Yeah. So one of the companies that I love is, and I love all of them.
I
So,
know, you love all your children. I have the same. I'm like, I don't want to pick. I don't want to pick.
one of them is a company called Flourish Care. It was launched by a woman named Melissa Browley from Rhode Island. And back to Proximate, she's a mom, and she did not realize until she was literally giving birth to her first child that she could have had a doula. And her pregnancy was unfortunately very, um, you know, it wasn't full of joy and happiness and all of the things that, you hope that that experience gives someone. It was actually quite um, to the opposite. And she realized that this whole time there was a resource available to her that nobody told her about that could have actually solved a lot of these issues. And she's like, never again will another mother know that they do not have this incredible resource available to them. She launched Flourish Care off of that insight and has been building out these platform and community of doulas, helping them get covered by insurance. So going through all of the paperwork and then making sure that the moms on the other side know that they have these folks in their backyard because she's very much about the hyperlocal approach. It's just been a joy to watch her work because she has both of that. Like she came from medical devices, and so she knows healthcare, she knows insurance, she knows this work and this vertical, and she has that passion and obsession that means she's not stopping. And so it's just it's folks like that where I'm like, yeah, this is why I do my job, is so that she can do her job and so that we can continue to create more of that cycle. And it's really special.
And what about give us one in the wealth creation side?
Yeah, so I went to Duke undergrad. I don't know if we have any other Dukies in the room, but I remember very viscerally seeing how much money that school made because of its ability to have such amazing sports players. And I thought it was weird, even since going to undergrad, even though none of the NIL conversation had really evolved to much more than just a rumbling of sorts at that time. Fast forward to, just the past couple of years, and we're seeing so much change and movement on the regulation side around actually ensuring and allowing these kids to get paid for doing what is a job at these schools. And it's so cool. So Scout is a company that we invested in that is helping these kids because, they're kids when they get to college. They're like 17, 18, 19. Um, and helping them really understand what are the implications of these new rulings? How do they actually start um, understanding their money? How do they actually start taking advantage of these opportunities and continue to grow their wealth? And back to Proximate Founders, the founder, his dad was a professional football player, made tons of money, and then lost it all. And so similarly, was in this position of like, I don't want anybody else to feel this way. This does not feel good. I know how it feels viscerally. And so how do I actually set these kids up for success from day one so that they never have to experience what my dad and what I experienced?
So, opposite question,
Mhm.
about your anti-portfolio. So what, we talked about MD Ally, which is a company that I also met years ago when they were here in the Seattle, Techsters Accelerator. Um, so you hesitated and didn't invest and you talk about having regret about passing on. So looking back, like, why do you think, like, what held you back and what have you learned from it going forward? And maybe
It's so,
you want to tell folks about the company a little bit.
yeah, it's such a great question because it informs a lot of our thesis to date because part of the reason why I didn't want to invest in this company, and so backing up a little bit, MD Ally helps, um, okay, actually backing up a little bit more. So most police and centers are just not great at actually operating their 911 calls. It's really a complex problem that a lot of this, that they just don't have the infrastructure or the technology or the know-how to do so. I used to volunteer actually in Oakland when I lived in Oakland for the Public Safety and Services Division, and it was just horrible. The lack of um, the time it took them to launch new technology that would actually allow them to save more lives, frankly.
Mhm.
And so MD Ally acknowledges this and says, actually, just route your 911 calls through us. You don't even have to touch it. You don't need to figure out the RFP process to buy a new software system to, start figuring out how to work internally. Just use our system. And I realized how important it was. Her background is, she knows the public sector very well. And I realized I was actually really afraid of working with the public sector. And I've decided since then to lean all the way in that I was able to see something about it, even though I missed it. And how do I actually take advantage of what I saw then and make sure that I don't miss it again? Because it's not something that a lot of investors have is this background in the public sector. I remember going to a dinner when I first got into the industry, and we went around the table, and everyone's like, "Okay, so what did you do before you got into ventures?" Like thinking, thinking, thinking. And I was like, it got to me, and I was like, I worked in government, and everyone was just like, what? Like, where did you come from? And so it's turning some of those, what I felt really self-conscious about into really powerful insights and leveraging those to make sure that, we we just actually use them to be better.
That's pretty funny. Banking, banking, banking. Don't forget a couple of consulting folks.
It's true. And
Yeah.
they were there too.
Um, Okay, so let's switch gears a little bit and talk about venture capital itself. So first, as a kind of background question, do you consider Symphonic to be an impact fund? And
Hmm.
what's that mean? Yes or no, what does that
Mhm.
mean to you?
Okay, I think you ask 10 people what impact means and you get 10 different answers. I think the same thing with pre-seed.
Yeah.
Oftentimes, when you say impact, folks think, well, it's then you're not going to get returns. So that's cool that you're doing this for fun and like as a retirement opportunity, but this is not actually going to be a powerful driver of returns on our bottom line. Our thesis is you can do both. You can be an impact-driven fund and also a returns-driven fund. These are actually not in and of themselves exclusive. And so we see ourselves as both. We are both an impact firm that is aiming to be top quartile in returns, and that's largely driven by the both the business model that I built Symphonic off of, because I think a lot of folks talk about portfolio construction kind of in theory, but don't really talk about how that applies to whether or not you'll actually be able to return capital through each one of those deals that you do. And if you do return any type of capital, what does that look like? Is it enough to produce any returns to your LPs? How big of an outcome might you need in order for you to get some of those returns to your LPs? I nerd out on that a lot. And so it's together. I think you need to have that foundation of why do we think we're going to be able to return capital? And I think when you have it, then you can pick whichever lane you want to swim in. And so for us, it's impact because we believe that if we're going to be um, closing access gaps around health and wealth, we want to do it very intentionally with a lot of care to those underlying communities. And that requires us to have this additional piece to our story.
Does that mean that you are in any way kind of measuring your impact? Like, do you have specific impact goals for your fund? And how do you know that you've accomplished them?
We do. So we give each one of our portfolio companies an impact KPI that we track alongside their business KPIs, so revenue growth and churn and all of the other KPIs that you generally track. We add an impact KPI on top of it.
Is that for you internally or for them to, so give us an example to sort of make it more tangible.
Mhm. It's for us internally, but it's also, if useful for them, also for them. I think that what we're seeing right now is a really interesting cross-section of different types of capital enter venture capital. We're seeing foundations invest. We're seeing family offices invest. We're seeing so many different folks investing in early stage companies, and those different folks are investing for different reasons. And for the foundation side, they also very much align with our thesis that it's both impact and returns. And so when they're pitching some of these folks, how do we also arm them with some of the data that they need to be able to get that capital? Our thesis at Symphonic is most early stage funds, most early stage companies are they all need a COO, but none of them know this or have the capital to hire one. And so we do a lot of work when we first start investing with companies to help them build out infrastructure to operate more effectively. And some of that infrastructure means building out tracking metrics so that they actually can tell themselves a story around like, okay, did we hit our goals this upcoming quarter? What are we tracking towards over the next 6 months? Because I think founders just get so much feedback from so many different resources that oftentimes they don't have their own metric or, North Star for what success looks like for them. They're always getting told what success could look like for them from another VC. And so a lot of our focus is around how do we give them their agency back in actually understanding where are we going? What are the goals here? To put it tangibly. To give you an example, Scout, our KPI, our impact KPI for that one is how many more millionaires is he helping create? Black and because a lot of the folks on his platform are Black and brown.
Yeah,
And that ties directly into our racial wealth gap thesis.
yeah. Wow. I bet that that's, I bet that's like a breath of fresh air for a founder to sort of have some mental space created.
It
Um,
is
to like
so
remember what's important, right? To like sort of,
It's so clarifying to the founder and also to us. I think that was one thing that I learned also. When you're an early stage investor, oftentimes you're also taking your metrics for success. Your metrics for success are dictated by what seed investors think, what Series A investors think, what Series B investors think. And I think that's a ridiculous way to live. Their decisions change at the drop of a hat. And
right.
so, we also internally at Symphonic want to be like, no, we're good. This is a great company because of this, and this. And we're going to make sure they find the right financing, even if it's not from, General Catalyst.
Um, Definitely find a lot of ridiculousness in our day-to-day jobs.
Yeah.
We could do a whole hour just on, but we won't. Uh,
We
or
can
maybe
do
we'll do it
that.
privately, like no audience.
Exactly. Yes, with some
I-
wine or just,
Actually,
mocktails.
that sounds really fun. Um, so what do you think? I mean, what do you think it's going to take? Like, what needs to change in venture capital to make impact investing more mainstream, to kind of remove the stigma of like impact and profit are, two ends of a spectrum and not like a thing, not two things that can coexist. Like, what do you think it's going to take?
The way that I think about this is similar to how I was discussing, like how this year it's all about finding our people and trading lessons there. Um, I think we're already really, really, really far advanced from where we were 10 years ago on this work. And so for us, it's been who gets it and let's roll with them. Let's continue to refine what we're doing. Let's continue to learn, iterate, grow, and less about the convincing. I'm out of the convincing game. It's not interesting to me anymore. So I'm much more just around how do we find our people and go. There's more than enough capital within that group for us to be successful.
How do you, um, so I bet like me, I bet that you've talked to like over 100 emerging managers that want to follow in your footsteps. Um, and probably for a really long time, right? Because you were at one of the kind of first emerging manager funds. So what is your advice? What is your advice to new fund managers or people who kind of have aspirations of doing that?
I say um, over and over and over again, only do this thing if you have something really new and interesting to add to this bucket. Don't do this thing because you want to be the next best symphonic. Don't do this thing if you want to be the next best precursor. Don't do this thing if you want to be the next best Graham and Walker. There's so many more ways to do this work that we actually haven't even figured out yet because we haven't had, I think, enough outsiders have a really interesting perspective on how to evolve venture capital. And that's how this work becomes interesting. I think those are the folks I want to work with. You have something, you see something I missed and you create it. And that is just so fun for me to be like, oh my gosh, why didn't I think of that? You're so like, yes, let's go. How do we work together? That's the goal. No, I think we are coming out of a period of a lot of copycats of a very specific type of um, early fund, and I just don't think we need to do that anymore.
So what do you, this might, you may have already answered this, but um, so you're helping redefine what success looks like in venture capital, both for the fund manager and also for the founder, and in a way for the world, right? Um, so fast forward 5 or 10 years, how do you hope the industry evolves? Like, what do you hope it looks like?
Hmm. Um, my vision for the industry is that one, we have a lot more exits. See a lot more
You're
IPOs,
here.
right?
Yeah,
And I think we didn't see a lot of IPOs because we've just been pummeling these companies with cash. There's actually a really good pitch book report about this today that was talking about 2024 and how nobody wants to, how valuations are the golden handcuffs. Nobody wants to accept the fact that their darling baby startup is no longer worth
ugly.
$10 billion and is now worth $1 billion.
Yeah.
And that to me is wild, like wild. And I know that it is based off of all of these incentives that those folks get by kind of closing their eyes and being, the monkeys with the eyes, the ears, and the mouth. But the long-term ramifications of that work feels just irresponsible. And so my hope is that over the next 5 to 10 years, we just become more long-term thinkers. I think the last 5, 10 years, we saw a lot of short-termism, and I don't think that's good for the industry. I don't think that's good for, um, and yeah, I'll leave it at that. I don't think that was good for the industry.
I think I agree with you. And I sometimes wonder if there's a way to create incentives in the industry that promote more long-term thinking. Because I feel like the majority of our industry are employees, not owners. And if you're an owner, and you know, in theory, you're incentivized for the long-term profit that you're going to make, right? If you're a GP, um, and there's an argument to be said that a lot of owners have funds that are so big that they're making a lot of money on management fees and don't really care if any of their companies do all that well. But setting that aside, I think that most of the industry are employees, and employees are not compensated for the long term. They're compensated for whether they got into a hot deal, right? So like they're compensated for what their performance is in any given year. Like that's what your bonus is based on. That's what, like, you make partner or not, whether because you got into a deal. And I think that that is the kind of, as long as we are compensating and setting the incentives for the majority of venture capital around getting into the hot deal and like what your portfolio looks like today versus how it actually performs over time. I don't know how we get away from that.
Yeah. I mean, I think one of the things that we're already seeing that gives me a lot of comfort is folks are just moving to a longer deployment cycle. We previously, I think it's not just everyone was incentivized to be short term because not only were you hoping to get in that hot deal yesterday, but if you did or did not get into that hot deal yesterday, that determined whether or not you're able to raise your next fund
Yeah,
tomorrow, even though you just closed your last fund two
yeah.
days ago. It was just this, it was everything was just like this. And we're already starting to see folks spend more time between fundraises and actually take their time deploying their capital, which is partially driven by LPs' um, more cautious activity as well, which I think is a good thing.
Mhm.
And I think the other piece is the infrastructure of the fund is a 10-year fund. Like we actually are. That's the whole point. Like it says in my LPA that I have 5 years to invest this capital. So why were we not following the rules? So I feel like
Yeah.
part of it is just like, this is actually the job. Like this is actually the job. What
Yeah,
we were doing 5 years ago was not the job.
I think we lost your audio.
Oh, whoops.
Or did I lose mine? Can we hear can
Uh-oh.
y'all
Can you
you can
hear
hear
me?
both of us. Okay, so I can't hear
Yeah.
Sydney, but okay, there you are. Okay, great. It might be me. It might be me. Okay, so if a final thought, and then let's open it up to audience questions. So if you folks want to leave some comments in the chat, and Divya, maybe you can help me because I see a lot of conversation. I'm having trouble finding the questions. So I'm going to go into our Slack, and maybe you can send me questions there. But in the meantime, so a final thought, if someone in the audience today is thinking about stepping into venture capital, whether that be as a fund manager or more likely for this audience, considering raising their first or their second round of capital, what is the one thing you'd want them to take away from your experience and your journey?
Hmm. So I think back to the how we're switching, I think we're also seeing this with founders where they're raising, and this is a question that we ask very early on is, why are you raising? Exactly what do you plan to do with this capital? And how do we build out this accountability structure so that we can keep you accountable to those goals that you've outlined for yourself on day one? And I think that frankly, women and people of color have always been better at this than others because it's always been harder for us to raise capital. And so I think we have been a lot more level-headed around like what exactly is the goal here. And it's really fun for me to work with those founders. And so I'm hoping that founders take that away too, that um, maybe some of the feedback that you're getting around raise the largest round you can and what are goals? You'll figure it out. Maybe are not the most, they might be from well-meaning people, but just think about and interrogate how that will help or hinder you in operating your own company and achieving the success expectations that you have for yourself. I think that's it. It's being more intentional about all the things.
Bonus question. How do you measure your own success?
I love this question. Um, the thing about launching Symphonic that I did not even take full advantage of in the first 6 months is the agency that I have now given to myself. I no longer have really anyone telling me what to do. So why
Addictive. I feel like I'm ruined forever. Like this fund better work because I can never take another job ever again.
ever again? It's done. It's over for me. And so but in those first 6 months, and oh my gosh, I'm blanking on the woman who has this quote, but it's amazing. And she says, there's so many of us who are completely free but don't know it. And so you have this, you're still operating
Oh,
off of this,
good. Chills.
right? You're still operating off of this OS that says like, oh, well, you have to stay in Oakland and you have to have these friends and you have to do this. And you just like start like, really burrowing in on yourself on all these rules that you think you need to follow. And once I started taking the layers off one at a time. So first I moved to San Diego. Then I promoted Shruti from venture partner to partner within the first fund instead of waiting until, next fund or doing whatever everyone else was telling me to do. And I just started doing things differently, but slowly. And now it's just, I feel my nervous system like shift where I just feel so much more aligned, so much more at peace, so much more comfortable. And that's what success looks like for me.
I love to hear that, and I love to see you in your success.
Thank you.
That is a pretty good thing. You deserve it.
Thank you.
I'm gonna throw you some questions from the audience for these last 10 minutes. First we have some just kind of practical questions about your firm and investing. So I'm gonna read them all and then you can kind of spiel. Do you lead? What is your typical check size? Do you follow on? Um,
Mhm.
what's your process? Like, what is your diligence process like? Um, and what's the best way for founders to reach you?
Mhm. So we have a few links that I will send as well. We have a how we work on Symphonic Capital that outlines the process pretty step by step because we try to be as transparent as possible around what we're looking for. We're looking to do deals around $1 to $2 million, sub $10 million valuations, have some traction. And by having some traction, it means like you have launched the company and maybe you have that first uh, paying partner identified, even if they haven't given you any money, but you know who you want to sell to. When we are doing deals, we like to co-lead. That's our preferred actually method of engagement. And that's largely because we like working with other venture firms. It's really fun. And then we're able to collaborate and ensure that the founders that we back have the support that they need to succeed. So you have two real kind of like folks who are rooting for you instead of, just a whole chorus who may kind of is rooting for you, but maybe, they're all busy because you're not top of mind. When we co-lead with other VC firms, we know that role means something and we look to really fulfill it to the best of our abilities.
How big are the checks that you're writing?
So we're writing somewhere between 250 to 500K checks, which is why we like to co-lead. I
Mhm.
think that those are, too small checks to lead outright, but
Mhm.
we really like to work with other funds to make sure that you get the amount of capital you need to succeed.
Um, this is a really great question. So, um, if founders are kind of scared, the word she used is scared of taking VC money, but maybe just like cautious or unsure, what are some options for that type of founder? Like, is there
Mm.
like debt instruments or other types of investors? Especially since you talked about like there's a lot of new money coming into the ecosystem. So what is that money and how can founders find it?
hmm It's a really good question. I would, if we had more time, want to interrogate what does exactly to your point, what does the scared mean? Why are you scared? What are the reasons behind it? I think that having a healthy amount of feeling a healthy dose of responsibility when you're taking VC money is great, and we need more of those founders. I think we're pivoting off of a cycle where founders took $3 million, didn't do anything, closed their company and moved on to the next thing without any type of remorse. And I'm so happy that we are not in that world anymore. And folks are just being a lot more really, really like thinking through what are the implications of taking this capital and how do I fulfill those expectations. And so I would say, I would want you to question the fear part and say that a little bit of scared is actually good.
Oh, that's really interesting. Um, I know the person that asked that question, so if you want to like chime in some more, Vanessa, I'll kind of look for your answer and pick at it. What about the other part of the question? What are some alternative sources of capital that you are helping bring into your companies or kind of exploring out there?
Mm-hmm. And I also saw Del in the chat, and she's actually the expert on this. She's the prior president of Black and Brown Founders and did a lot of great work on helping founders understand like what are different government programs that they should be exploring, what is an SBA loan, what is a accelerator program that is local that can give them an extra 10, 15, 50, 100K to get them off the ground. Yes, I saw you, Del.
Delta, if you have some links that you want to share, please add them and we will spread them out on social after as well.
Okay, thank you.
Okay, and then there's a quick question here. How do you feel about SAFEs as investment vehicles?
Oh my gosh, this is such a top of mind discussion that I have right now. with both founders and other investment managers. We are entering a period where folks have been raising on some of the same safes for years, literally sometimes 3, 5 years. We
Yeah.
talked to a founder who raised over 100 safes, and I think that the lack of like forcing function around a safe to any type of conversion is really concerning to me. And so what we are actually doing more of is convertible notes, because we like to have, even if in 24 months, there's no like forced conversion, because we're not going to do that. I mean, like, I'll just be honest, we're not going to force you to do it.
Mhm.
But we want to have the conversation around why have we not decided to do a price round yet? What are the next expectations or hurdles around that next price round? How do we be really thoughtful about like actually getting to that place? Because that's the goal. Safes, I think, are useful, but only when there's a larger firm who's going to come down the pike in 2-ish years that's going to price the round in this new concept and construct that we're currently operating in, which is not always the case. How do we actually think about getting to that pricing without that external push?
Mhm. Um, I have a couple of questions here around here we go. How hands-on you are in the early days. So like what does it look like if you do a pre-seed investment, what does your engagement with that company look like in the first few months?
Mm-hmm. We I don't want to say you're going to get sick of us, because I hope you like working with us too, but we are going to be very hands-on. So Shruti generally is on a call with each one of our founders every 2 weeks. And that is to talk about updates, talk about KPIs, talk about team, talk about honestly all the things, because when you talk that frequently, there's a whole bunch of other stuff that gets uncovered around. Maybe it's just a small contract negotiation that you're looking for feedback on. We're usually investing in companies that are not in the Bay Area or New York. And so they don't have these ecosystems where they can go to a happy hour every night and see a whole bunch of founders and get all the newest, hottest information. And so a lot of times we're also serving as a part of that community. And so we're actually hosting our first Founders Day in a few weeks to bring them all together, to start building out some of also this infrastructure within the group. So we have a strong portfolio now, and so we're excited to have them get to know and support each other, in addition to leveraging the support of us.
How big is the portfolio now?
We have 13 companies.
Oh, look at you. Um, Very cool. Okay, so going back to the theme of finding your people, how does co-leading with other firms play a role in that? Or are there
Mhm.
other ways that you're going about doing that?
Yes. Um, we have a list of people we like working with and a list of people we don't like working with, just to be honest. And so we know what different signals, different firms come with, what baggage, what loveliness, all of it. I think that's one of the best things about being in the Bay for so long, is that I was just able to see how a lot of these folks operate up close and personal. And so our thesis is that we look to find our people to co-lead with us. And that means if we know your thesis really well, we will support the founder. If the founder also wants to work with that investor, obviously, we're not going to push an investor who the founder doesn't want to work with. But if the founder also wants to work with that investor, we do a lot of work on getting other investors comfortable and excited about companies that we're excited about too. That's also part of the job that I think is just part of it, where I'm on calls with other investors, unfortunately, more often than I'm on calls with other
Oh,
founders
yeah.
of companies, to talk about the portfolio, to, evangelize the portfolio, to answer questions, to get, other folks to say yes, to make sure that our founders are capitalized so that they can be successful.
That is awesome. Okay. Let me see. how does your impact lens affect your due diligence?
Hmm. So that's actually one of the first questions we ask, um, is what is your connection to the problem that you're solving? We ask that in the initial form that we ask every founder to fill out before we take a deeper look into the portfolio company. And if you don't have a good answer for that question, and a not a good answer is, I explained some of them earlier on in the conversation, but so it's a version of one of those answers. That's the no. And so it's a very clear decision for us um, around if we don't believe that you really have that connection and obsession with that community, then um, you still might be a great company and you still might grow to become $1 billion outcome, but it's just not right for us. And that's part of our ethos more generally, is that there's just so many awesome companies doing great work that there's more than enough to go around.
Final question, well, two more. One is, how can founders get in touch with you?
Yeah, so the best way, if you're looking for capital from us, is to fill out our Airtable form, which you can find on my LinkedIn, or you can find on our website, symphonicapital.com.
Okay, and then now the real final one is, what can this community do for you today?
Aw. Mm, I mean, I think like the best part of this work is like, if I inspired you, how can you inspire someone else? It's like that's the energy that is going to get us through this moment, is like just inspiration, excitement, joy, forward movement. And so that is what I hope you guys take from this, and that type of energy. That's the point of putting this type of energy out in the world, is just to keep it going. So
Well, Sydney, it has been lovely to spend an hour with you. Thank you so much for doing this. That was really, really fun. I hope to see you in person soon. I'll let you know next time I'm down there. For everyone who joined us, thank you so much for giving us an hour of your time. Time is the most sacred of resources, and I never take it for granted when you spend a little bit of it with us. So thank you so much. We're going to do another one of these on March 12th with Jenny Fielding of Everywhere VC. And hug your loved ones, take a deep breath. It's a crazy time. I'm sending you all a lot of love and good energy. I'll see you guys next time. Bye. Thank you, Sydney. Thank you, Divya.